Hey Ziad, how are you?
Hey Shad, how are you? How are you doing?
I'm doing well. I'm doing well. Pleasure to connect with you. Thanks
Likewise,
for.
likewise. Are you in Dubai today?
I'm doing all right. No, I'm in London today. Whereabouts are you?
I'm in Sweden currently. I'm in Sweden.
Ah, wonderful, wonderful, wonderful. Look, it's an absolute pleasure meeting you. I you're very active in the social media space and pushing your brand, and you have a lot of really great things to say. And I imagine you're very busy and you have a lot of interest. So again, I appreciate you taking the time. But I would, of course, I'd love to hear a bit about your background as well, and what you guys do specifically at Mean and Growth, and of course to share a little bit more about ourselves as well.
Absolutely, absolutely. Thanks for that. Thanks for having me to here. And it was absolutely my pleasure to have you here in today's call. First of all, Shad, as you have already mentioned to me before, you are managing 150 milli today, correct?
Yeah, that's right.
Awesome, awesome. And are you based in Dubai with your own firm, or where are you based at currently?
Where we're based. So I can tell you. So I'm based in London. We set up the fund in New York about 6 years ago.
Okay.
So if it's helpful, I can kind of tell you a little bit about that background first. What you tell me what works best for you. But we started about 6 years ago. We've done, as you've seen, 21, 22% kind of net annualized over that time. But what we really do is focus primarily on European markets. So I moved out here about 6 months ago to really, be closer to the underlying businesses, but also to focus on, scaling the fund altogether.
Got it. Understood. And right now you are managing 150 milli. Since when have you been at the same mark as you are today?
Oh, that's a good question. Well, we have grown quite significantly. We have so the GPs are some of the largest investors into the fund. We probably started with what 25-30 million dollars, right? So we started very small, and kind of most of that has been through performance, and of course we've raised some incremental capital along the way. But yeah, I may be more interesting to answer your point or question. We haven't actively marketed the fund and really since we began. Part of that is because we wanted to establish a viable track record, and I think we kind of have that now. And the other part is finding the right marketing partner to help us scale the fund.
Got it. And I'm assuming that's what you have done lately is only from your own connections, from your
Yeah,
own
that's right.
relations. That's what you have done, correct?
That's exactly right. Yep.
Got it.
Yep.
And it's like offshore capital, or is it like from the US, most of that?
Yeah, so we run an evergreen fund that's a kind of a typical U.S. onshore offshore with a Cayman master feeder structure, and it's mostly U.S. investors. We have done in U.S. kind of family office high net worth individuals that really know what we do. Um, we've also done large co-investments on particular names, and there we've had international capital, mostly from Europe.
Understood. Understood. For 2025, how much have you raised and closed?
And 25, I mean, we're just at a point now where we're starting to actively market. So, I mean, immaterial, less than $10 million.
Less than 10 million.
And 25, yeah. Oh, well,
Understood.
actually, probably about right at about 10 million.
About 10 million.
About 10 million. Yep.
Understood. And the performance drawdown report for the last 3 months?
In the last 3 months, I mean, we're up. Well, even now with the volatility, we're up about 10% year to date. So it's been fairly consistent. 2% in January, 4% February, I believe, 3% in March. I mean, roughly right around those numbers.
Got it. Do you have a trade history that you can share it with us after the call?
We absolutely do. Yep.
I would love to review that after the call. That will absolutely good place to start with.
Sure. Sure. Yeah. Happy to share that with you.
Awesome. And the current
Yep.
the current overall 150 milli across all the accounts across everything that you are managing today. Correct.
That's right.
Okay. What the capital targets that you are looking to raise?
Well, the strategy we run, I think, could really deploy about $3 billion efficiently. Now, realistically, you don't go from 150 to 3 billion. We totally understand that. I think our next goal is 300, then 500, then ultimately $1 billion.
300 and 400. Is it like this year?
We would like to get, well, we're 150 now. I think we'd like to get 300 million probably within the next 12 to 18 months, ideally. So that's why we're at a process right now where we're looking to, understand the best marketing partner for a firm like ours. Help us do that. Yep.
Got it. And what do you think that you have for unique selling point? What do you have for edge that you have already established it now since you have already started?
Yeah. Well, that's a good point. So I can tell you a little bit about kind of what we do and how this works. So specifically what we do, we run a very high conviction fund that invests into what we think are extraordinary businesses at very compelling valuations. And then we partner with C-level experts and industry experts to formulate plans to unlock value in Europe and what are effectively very inefficient and overlooked equity markets. So the USP that we deliver is we're very actively focused in a very inefficient market by partnering with C-level experts. Most people don't do any of that stuff. We run a strategy that's very similar to the likes of Elliott, which you may know, or Sevion, which are, again, very, very respectable, hedge funds that have been in business for many, many years. But when you're 50 or $70 billion AUM, like those funds are, it's very difficult to invest into billion-dollar companies, and that's kind of our sweet spot, right? Because it just doesn't move the needle for them. So we play in a market, again, that's very inefficient, that, ultimately doesn't have a lot of competition in a very active way. That's really the secret sauce for us. So our ideal investor is probably, European, family offices that have, exposure into European public equities at the end of the day.
Okay, European. So which country in Europe have you seen?
Mostly Western Europe. So we spend a lot of time in the UK at the moment, and that's, again, since Brexit, UK is trading at half the levels of every other kind of Western developed market for the most part. It's very minority shareholder friendly. It's very inefficient. You don't have MiFID regulations effectively means that there's less sell side coverage, and it's a very passive market. So a lot of institutional shareholders that don't have the ability to engage with management teams when companies do the wrong things. So it's mostly UK, but it's also, other parts of Western Europe and Southern Europe, you could say, Italy, Spain, Germany.
Got it. And what's the lockup period right here?
Oh, so we have two classes. Well, it's an evergreen fund, but we have two classes. One is a 12-month lockup, and one is a 2-year, 24-month lockup.
2 years. Understood. And do you have any metric on the lifetime value of the ambassadors that you currently have? I mean, how many of them they didn't want to continue with your own fund, they wanted actually to exit, or they wanted to stay? Do you have any metric on the short-up rate on the lifetime value?
I would say we probably have 15 investors.
Okay.
I would say eight of those, so half of those have been around since we've kind of started and compounded with us. A few of those have done co-investments with us, which are outside of our funds, and then the rest are new. We have had two investors redeem, two big investors redeem over that point in time. Big, I mean, big for us. I mean, they're a few $1 million type things. One of which was due to an individual that was taking money from all external managers and wanted to manage it directly himself. So he took money from everybody. We know this individual incredibly well. And then the other one was an individual we raised capital with prior to having a major drawdown, which we can talk about, and then ultimately redeem right after that.
Got it. Got it. Understood. So currently you have 15. That's the total that you currently have. 8 of them they have already started. They are with you since you have already started the fund.
That's probably about right. Yep, roughly.
Understood. Then you have good retention strategies, correct?
I'm sorry?
Then you have good retention strategies, or what are you using for retention strategy?
Retention strategy? Yeah, I think so. We're very blessed from that perspective. And again, I think a big reason for that is A, because of the performance. B, because we're always trying to improve the back office operations, obviously, which is quite key to a growing fund. And I think people appreciate that, and C, it's we've been able to deliver on what we promised we would deliver over that period of time. So yeah, we've been quite blessed with that. We've been quite blessed.
So you don't break the team promises.
Well, we certainly try not to. Yeah, of course.
Right.
Look, I think you've actually said it in one of your videos as well, or one of your posts that I read, and I think it's super important. Particularly now, a lot of fund managers tend to fall back on who they were partnered with prior to starting this fund, and kind of where they trained, right, et cetera. And I don't necessarily think that matters as much anymore as it does, having a repeatable process, scalable business, and ultimately having, the ability to be incredibly, trustworthy individual at the end of the day. So, I don't know. I mean, we'll see kind of how things shake out, but that would be my view. I think you said it, phenomenally well.
Thank you. Appreciate it. And my main question to you right here is, how many meetings are you generating right now with LBS, qualified at once per month, and what the close-up rate? Do you have any metric on the close-up rate that you currently have with the meetings?
No. So again, up until this point, it's just been kind of friends of friends, and kind of word of mouth.
Okay.
Yeah.
Okay. Only friends and family.
So yeah, so we don't really have an ongoing marketing process right now.
Okay,
right?
okay.
That's what needs to be established for us. And so, again, what we're thinking of doing on that front, what we are doing is, we're interviewing, a handful, 10 different, third-party cap intro placement agents that partner with firms like ours to help them scale and grow, right?
Okay.
So and maybe why this is relevant, Ziad, is because there's 3 principal partners, investment partners at the fund, and we've all have investment backgrounds. And 2 of us are private equity, and the third is more activist public equity investing background. So we try to capture the best of what private equity does really well: concentration, operational expertise, ability to drive long-term value. But we do that in public markets, so we don't have to pay massive premiums and sacrifice liquidity. Right. And again, our backgrounds really kind of bode well to that. But we don't have, marketing individuals on the team. So what we think we need to really do is, again, partner with a group, maybe like yours as well, or others, to figure out how best to crack that code and start this process.
Sure. What do you think that you need to have? Do you think that you need to have a brand, and because the brand will help you to actually have a better due intelligence, and you need actually to have intros from private LBS that are already qualified to have engagement with?
Well, I think it's a bit of everything, but I think the biggest thing we need right now is credible introductions to a network of families and institutional investors that we don't currently have, right? So again, it's getting our name out there to the right folks, and having the right relationships to find the right people to have those meetings.
Understood. And as you have already mentioned right here, you are looking to rise to 300 milli, 400 milli. That's with the next 12 to 18 months. That's the main plan right here.
That's what we'd love to do. Yeah.
Got it. And let's say that has already been done. What could we see the next few steps from there? Is it like more operating internally, or could we see more expanding externally to new all-time high in the asset management?
You mean from our funds perspective, what would be the next step for us?
Exactly. Do you think that you can handle the capacity, you can handle the 300, 400? Okay, and then from there you will go directly to new all-time high in the management, or what do you think that it could be?
Good questions, yeah.
Thank you.
Yeah, it's a great question. So I would answer that by saying, yeah, we can absolutely manage that. Just from a personal background perspective, prior to starting Coast with my partner, I was in the Middle East. I ran a large pool of capital for one of the Abu Dhabi sovereign wealth funds. It was about a $12 billion portfolio, both public and private equity markets. And I sat on most of their boards across Europe to drive value. So we've historically managed much more than that in a meaningful way. My other partner ran, $1 billion sleeve of capital for one of the most successful activist funds out of New York for a long period of time. So yes, we have had managed that form of capital. Now, particularly to Coast Capital, what we would do with incremental 150, $200 million is we would, expand the team slightly, right? We would still run a very concentrated portfolio, so we don't, we wouldn't have style drift at the end of the day. We'd still do what we do, but we'd probably add one or two more analysts, and we would probably enhance the back office, right? In terms of bringing on board a fully dedicated COO or / marketing individual.
Understood.
But then, but in terms of then growth, obviously want to continue to compound at 20-25% annualized, and then look the next 300 and then 500, then ultimately get to $1 billion.